You're coming to China at a very busy week. We've got plenty of economic numbers out, and so far they've been pretty disappointing. With this backdrop, what is DBS's growth targets for Greater China?
Good morning, Heidi. Good morning, Sherry. Thank you for having me here today. Well, indeed, after the reopening, we are very excited to be able to have our first GBA conference after almost 3.5 years hiatus. We are quite optimistic that the government is doing everything they can to stimulate the economy, considering the slow starts after COVID. There are some pockets of areas and industries that are very interesting to follow. For example, electric vehicles and batteries and new energy, and also the huge investment that is taking place in China on the semiconductor industry. So we are very positive that GBA specifically will outpace the growth of the general growth in China. And once the savings rate, which is historically high today, is returns to spending, I believe that the economy will rebound and we will see some growth in the latter part of the year and in 2024. So there's no reason not to be optimistic about the future and the long-term prospects of China. After all, if you see an $18 trillion economy, the second largest in the world, growing at a pace of 5% this year and 4.5% expected next year, provides almost $1 trillion of incremental growth. So that is something to be excited about.
Does that mean that that will propel DBS's growth? Because in the first half, it seems Greater China accounted for about 20% of your total income, but correct me if I'm wrong. And where are we going for the rest of the year and perhaps a little bit more long term in the next 5 years, the contribution of China to your business?
Well, we see China not only on our business in domestic mainland China, but we see China business holistically around Asia, because we support not only Chinese companies and Chinese affluent segment in mainland China, but also we have a substantial, important business offshore in Hong Kong, Singapore, and the rest of ASEAN countries. We accompany Chinese companies that grow in the rest of Asia, in the world, through our offshore arm and relationships. So the way we see China is comprehensively. We are very optimistic. If you see for example, the track record of DBS Hong Kong and DBS Singapore related to China businesses is double-digit growth in the last 2-3 years. And there's no reason not to be optimistic about the continued of these growth and pace of growth. Of course, we do recognize that there are some challenges now, that the interest rate differential between US rates, Hong Kong dollar rates, and RMB rates is substantial. And thus, we have seen a lot of loans shifting from offshore to onshore. Nonetheless, on the liability side, we have a windfall of opportunities because exactly the interest rates increases offshore.
What about the competition? How do you, I guess, position yourself in a market that has players like HSBC? What's the strategy there?
Well, we have been very clear about our strategic positioning. We are a truly Asian bank, established to serve our Asian customers, wherever they are. And we have been in Asia for the longest time. We have a very long-term view, and therefore we accompany our customers even through thick and thin. And as we have seen in the last 3 years, especially during COVID, you see how we have progressed inorganically as well with the acquisition of some businesses in the last few years, especially European banks. We have also acquired the consumer bank business of ANZ. Now we are about to integrate the acquisition of Citibank retail business in Taiwan. I think that the prospect of our strategic positioning, as well as our international credit rating, coupled with our product capabilities and long-standing for customers, make us quite different, I would say.